Are you hearing me? Yes, yes, yes. Okay. Audio. Thank you. So first, we will talk about trend identification, how to identify the trend, what is the major structure and what is the minor structure. So first of all, we will discuss about trend identification. For example, sorry, we are looking a bullish trend in a higher time frame structure. Okay, and suppose this one is a H4 D1 weekly, any higher time frame structure. Okay, when market push the higher, that means market is a bullish. Okay, so what is break of structure, what is order block? In this seminar I will tell you about these things. So first thing is how to identify the trend, second thing is what is break of structures, and third thing is how to identify the order block. Okay, so first of all we will talk about the trend identification. So trend identification basically is a very simple process. I think you have seen a lots of videos on YouTube which is available in a free, and everyone saying that this one is a bullish trend when market broke the low and push the higher and down. That means trend is a bearish. Okay, but in a reality way, this is not a reality. Reality is a very different. You have seen this is a, like reels. This one is a reels and the reality is a very different from this structure. Okay, so let's talk about this. When market create higher high and higher high, something like this. Okay, so this is a clear uptrend. Okay, and another scenario is here. If market create new higher low and push the higher, again move like this and push the downside and break this low and go higher. Okay, so why this happened here and why trend did not change here? Okay, so this is a very important thing. First thing, this one is our minor low, minor higher low. Okay, and this one is our higher high. Okay, so basically this structure is a corrective structure and this is a not major structure. Major structure is here. Yeah, this one is just swing low and this one is just swing high and this one is also swing high. Okay, when market broke this low, then market momentum shift bullish to bearish. Okay, if market broke this low, that means market momentum did not change here because market momentum swing low is here. When market broke this low, that means market momentum change here after broken this low. This one is the original previous low. Then market take a pullback and go down. So basically this is a concept. I know everyone now about trend identification already. Okay, so what is BOS? BOS means break of structure. When market broke high and low in a trend identification during trend reversal and trend continuation, which is called break of structure, similar like this, and this one is also BOS. Okay, BOS because market broke this previous high and create a new high and then take a pullback and push the higher. This time market already broke the high. That means this one also called break of structure. and this one also called break of structure. Okay, until market broken the high or low, which is called BOS, break of structure, and this one also break of structure. Sorry, this one is not break of structure. This one is your break of structure because market this time market break this low, which is called break of the structure. Okay, so basically, move on the live chart. First thing, move on the higher time frame structure. Remove all trend tools. Suppose this one is your higher high in a daily time frame structure, then market take a pullback and create new low. Okay, then market consolidate in this range and break this low. Okay, so when market broke this low, that means market momentum is bearish because market creating new lower lows. Okay, this one is called break of structure. Why? Because market break this previous low. Okay. Then market take a pullback and push the higher, little bit higher, and then again break of the structure is here. Okay, and now you can see here before they broken this high here, and this was the previous higher low. Sorry, lower high. Then market broke this structure is here and take a new, create a new high, and then again push the higher, but unable to break this previous swing high, which is here. Okay, why? Few pips, and test this level and should go down. And here, when market broke this low, that is also called BOS, break of structure, is here. If you are our Telegram channels member, then I won here because there is a retail traders are buying here. I told you that gold is a bearish, and in future gold will test around this level $1,720. Why? Because market is bearish. Market breaking the lower lows continue. Uh, are you hearing me? Someone messaged me that mic is not okay. Sound is okay. Okay. Thank you. Please check your connection. If audio is not perfect, then you can check your mic. Okay. Thank you. So basically, this one is a called break of structure, market creating lower lows, and these happen in a also in a bullish trend, similar like this. Move on the 4-hour time frame. This one is a swing high, swing low, and this time market broke the high is here. Sorry. Yeah, market broke this structure is here and again broke this structure here, and same thing happened here. That means market momentum is bearish continue, and this one is called break of structure, and same thing happened here in a bullish trend. Market previous swing high is here and this one is swing low. Market broke this high. This one is called break of structure. Market push the higher and create new high and take a pullback and push the higher. This one is called break of structure because market breaking the higher high and creating new high, and then take another pullback and push the higher. This one is called break of structure, again creating a new high, and then finally market broke this low is here, which is here, original low is here. Okay, then market momentum switch bullish to bearish. So basically this is a concept for the market break of the structure. I hope you understand these things. If you have any question regarding this, you can ask me. Sir, can we get this video later in our YouTube? Yes, I am recording this session. I hope you will get this session on YouTube. Any question regarding break of structure? Yes, yes, you can ask me question. B was fully clear. Okay, thank you. Multi-time frame analysis. Yes, I will do multi-time frame analysis. How to tackle when we have a structure within a structure. Yes, actually, when you trade in a higher time frame to lower time frame in multiple time frame, then you can identify structure within a structure. I will show you. When the break of structure retracement is, we are looking for entry. Yes, when market broke this structure, then we are looking for the entry. Take some pullback on the order block, then we can buy or sell. What confluence do you use for a trade? Mostly I use imbalance, equals high liquidities, and order blocks. These are many factors to take any trades. So break of structure is clear. Okay, thank you. Now move on the order block. How to identify the order block? First of all, I will use gold chart, remove all these things. This one is weekly time frame analysis. And now you can see gold is extremely bullish in a higher time frame structure. Even monthly time frame structure, gold break of the structure is here. That means in a higher time frame, market is extremely bullish. Okay, market break this structure. When market broke this high, that means market is bullish. As I told you, then market take a pullback and push the higher. So where market take a pullback? So first thing, identify in a higher time frame, break off structure, then move on the lower time frame. Now you can see here in a weekly time frame, market is also bullish, making higher high, continue and pushing the upside. Okay, and this one is last swing high, and this one is a most recent low. If market broke this low, which is here, if market break this low, then we can see downside move, more downside move. Okay, so what is order block? Order block is a last selling candle before the buy, and this and reverse in a selling seen last buying candle before the sell. Let's suppose this one is a bullish trend, and when market create a new high and break of the structure, then market take a pullback, and then market create a order block, maybe here and maybe here and maybe on the bottom. Okay, so you need to identify them. So how to identify them? This is a very simplistic. First thing is here, this one is entirely moved, and this is last bearish candle is here, which is our order block. So basically this one is a weekly time frame bullish order block. This one is the last bearish candle before the buying move. That means all big institutional orders and banks orders putting they in this range, they will buy here and push the upside. Okay, if market unable to hold this level and break this low, that means market momentum is bearish in a higher time frame, and something like this. Sorry. This one, if market broke this low, then market push the higher and take any order block and go down. So this will be scenario in a gold, but still gold on the bullish pattern, and this one is a bullish engulfing, sorry, bearish engulf candle, and next candle is a bullish engulfing. This one is our bullish order block. Now move on the daily time frame. Daily time frame structure is a bullish, and now we need to wait for the confirmation before the buy in a higher time frame structure, because market creating lower lows in a daily time frame and 4 hour time frame. Okay, because higher time frame is bullish, but we need to one more confirmation in a lower time frame to take entry, like 1 hour, 4 hour, and even. So now move on the 4 hour. 4 hour is also bearish, market breaking the lower lows, continue. This one is our bearish order block is here. This one is a bearish order block. Why? Because market break this low and push the higher, and market came back this level, then go down. Is here. Okay, but market did not test this level and go more downside. Now move on the 1 hour time frame to take this entry. When market came back in our price of interest zone, order block, in imbalance zone, then you need to wait for the confirmation more lower time frame. As I told you that when market is bullish in a higher time frame, okay, then move in the lower time frame to take entry for reversal and continuation also. In this case, you can see here, this one is a swing high, this one is here, and the swing low is here. Okay, market swing high is here and swing low is here. Market break of the structure is here. That means market momentum is bearish in a higher time frame, in a lower time frame. Higher time frame means daily, 4 hour and 1 hour also. When market broke this low, that means market momentum is bearish. Now you can see here, this one is our bearish order block. You can sell gold is here, and stop loss just above the order block. And this one is our 1 hour time frame entry, and your target will be is around here, because this entire gray box weekly time frame bullish order block, maybe market test this level and push it directly upside, because higher time frame is bullish. So I will set my target is here, which is 11.5%. Okay, if you refine this entry in more lower time frame, then you can take more advantage of this trade. Now, when you move in the 15-minute structure, now you can see here this one is also break of structure in a 15-minute, which is here, and this one is a swing high, this one is swing high, and this one is a swing low. Market break this structure is here, then market take a pullback, which is here. And 15-minute entry will be here. And now your reward will be same. Target will be same here. And now this time you will get 22% because you are refining in a higher time frame to lower time frame. If you move in the more lower time frame in a 5-minute structure, then you can refine your entry is here. Market broke this structure is here in a 15-minute, and then market take a higher high, something like this. This one is swing high and this one is a swing low. Market take a pullback is here and push the higher, and then market finally broke this low is here, and then market created new break of structure in 15-minute. Okay, so basically this one is our another entry is here, which is order block is here, and your entry will be here, and stop loss just above this high, and target will be same, and market create this equals high is here. But unfortunately market did not come back here to test this level, and market pushed the downside rapidly, because this one is our high probability entry, because these are the equals high, liquidity sitting above this high, retail traders selling here, but in this case market pushed the higher to take this order is here and then go down. But market respecting the higher time frame structure, and second entry is here, which is here. I place my sell limit is here, but by few pips this order did not trigger, and this time risk reward ratio was more than 30%. So this is a basic concept about how to identify the order block and how to take them advantage. So everything is clear here. You can ask me on chat section. 50-minute and 30-minute confirmation for your action, which is better. This depend on your higher time frame structure and depend on the price of interest. What is order block? Prashant asking me. I just explain about order block. Order block is area where we are looking for the sell, where most of the smart traders put their buy and sell orders. Yes, someone asked me a very interesting question. How do now which is order block will hold, because there are something 2-3 order block. Exactly. This one is a very interesting. Let me explain about this. For example, market is a bearish. Okay. Market break this structure and push the lower. Again, market break this structure and push the lower. But you will get sometimes in a lower time frame structure, 15-minute, you will get 15-minute order block is here, and 15-minute order block is here. Sometime three, but in a rare case, this one happen. But mostly one or two order blocks generate in any impulsive move. Okay. Suppose in this case, two or three order blocks, then which one you will choose that maybe this one maybe happen here and push the lower, and sometime market did not respect this order block and push the higher, and this one and go down. Okay, and this one and go down. So basically nobody don't know which order block is will hold your trades. There is only one solution. You will refine your entry in a lower time frame to take this advantage. You can, if market test first order block is here. Okay, for example, let's suppose this one is a 15-minute structure. So this one is a 15-minute structure and market test this level. First remove this thing. If market three order blocks. Okay. So first entry will be here, and this will be risk entry. This one is called risk entry. There are two types of entry: risk entry and second entry. Little bit you can say risk free, and there is additional confirmation I'm showing you. First entry will be here, and this will be a completely risk entry because you are taking as per the 15-minute order block. Second thing is more order blocks above this order block. That means market maybe take upside then go downside. Okay, so how can take advantage of them? First thing, when market come back here and move on the 5-minute, 3-minute, maybe 2-minute, then you can see here a minor structure looks like this. Sorry. And this one is a 5-minute structure, and market creating higher high, then market take a pullback is here and break of the structure is here. Okay, and this one is a 5-minute structure, then market take a pullback and refine the 5-minute order block and take the sell off. Okay, so this will be your additional confirmation entry. If market did not create any break of structure in 5 minutes, then ignore this order block, then market push the more upside, and same thing will be happen here. Then you can take entry here, and last order block is here. This one is the highest probability because this one is the origin of this move. Okay, so you can take here two types of entry. First entry is a risk entry, which one is here. The second entry similar like this, market came back here and refine the 5-minute order block, something like this. Okay, then market came back here and refine the 5-minute order block and push the this order block and go down. So everything is clear here. Any more question regarding this order block, break of structure, trend identification? Ahmed Nurki asking me how to search PY. I just explained that PY means order block imbalance. There are some many factors to identify them, but basically order block is our your PY. Do you have any favorite pair? No, there is no any special pair to trade them. How do you start imbalance? I will I will explain about imbalance liquidity in next session. What is point of interest? Point of interest is a area like order block imbalance and equals high equals low liquidity where we can sell and buy an area where we can put buy and sell orders. That's called point of interest. How about if I look by actually I don't trade Bico because I don't know exactly how they work, but soon I will update about Bico. Minor structure, can I actually follow the higher time frame structure in a higher time frame like 4 hour daily and weekly, then move on the lower time frame structure to take advantage to take entry in a lower time frame because lower time frame is a additional confirmation to take any trade. How can I tend the perfect time to trade? Mostly London and New York session is lots of volatility. During this session, you can take trade. It's compulsory to take OV when you take PUI. Yes, it's a very compulsory because there is no way to trade without order block imbalance any PUI. Break identification because big, not body. When you mark the break of structure, then connect with body. Sorry, big like this and this one because some people's take with body and some people's count with big. But width is your uh, is perfect to identify the break of structure. Sometime market did not break off the structure and you will uh, count with closing body, then you may be wrong and your trade will be go against. How to determine the stop loss and TP? Stop loss depend on the order block. If your order blocks you are taking trade as per the 5 minute, then put the stop loss as per the 5 minute structure. And if you are looking for the 15 minute, then move on the stop loss as per the 15 minute structure. And target you can set as per your higher time frame order block. If you are looking buy trade, then you can set your target as per the higher time frame order block and PY zone and maybe equals high zone and equals low. Lots of people set their target on a recently swing high and low. There are so many factors, but you can take off target as per the higher time frame structure. POI, this is a perfect example. Gold, currently gold trading on POI zone. As I share in last day, I think today about that market trading on the POI zone. This one is a bullish order flow. Okay, that means this is our price of interest zone where we can buy gold. So in a higher time frame, this one is our POI. Okay. Now move on the 4 hour time frame. And 4 hour time frame is a bearish, but higher time frame trading on the PY zone. This one is a recent swing low and this one is swing high. When market came back here and broke this high, that means this time market broke this high, and this one is called break of structure in a H4 time frame. Then market take a pullback and find the order block in a 4 hour time frame, maybe here and maybe here. Okay, then take advantage of this entry and push the higher. So most of the times this will happen in a higher time frame to lower time frame. Okay, so thank you so much joining this session, and remain things will discuss in a next session during